So watch this. Let's give one more little tidbit on these signs or signal of a trend change before we wrap it up here for the day. So if I go back in time a little bit, using this hourly chart, we'll stay on the hourly chart. And I see here from the 20th of June, all right, first candle of the day, very similar situation. This wasn't the same type of doji, but I like to call this, and what I teach in my class, Lazy E-mini Trader, is it's a pseudo doji. That's the name I gave it. I issued the name, and it's basically close enough in my book. And you see what happened was I call this a sign or signal of a trend change. Doesn't work 100% of the time, but this one did come down. Okay, the market went from when it put it in, let's call it 549, give or take, down to 543 or so, bounced around a little bit. So in terms of S&P handles, about 60 S&P handles, 6 points in the spiders. You're not going to get the same thing every time, but I just wanted to give you an example of you don't know what's going to happen next, but what you have and what we described earlier today when this thing was formed at 10:30 is you have something to trade against, which is the high of this candle, 556.25. So if you're going to lose on a trade, what's one of the rules that I also teach in the same class? You have to lose small and fast. You have to have a point of reference. You have to know where the trade is wrong before you get into the trade. Is this a reasonable risk reward, all things considered? And the answer is yeah. Can they continue to melt up and make new highs? Yes, but at least you're not going to take a ride for more than 556.25 on close, meaning hourly close. And that's how you gauge whether whether you want to take this trade or not is up to you. I'm just saying how you teach it, how you learn it, how you apply it is here.